Big Ben says the Fed could slow down pace of purchase, and Wall Street has a major reversal. World markets are also following our lead lower. What plans and strategies should you have for the coming sessions? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So stocks had a quick move to the upside during Ben Bernanke's testimony early yesterday morning, but then we saw that major pullback, which showed right before the 2 o'clock release of the Fed minutes, which showed that a number of Fed officials thought tapering in June would be a good idea. And that led us to see what we call an outside day. Will that lead us to a short-term directional change now?
Well, yesterday as it transpired, a lot of people were talking on the desk, we were trying to figure out, was that your blow-off outside day type of phenomenon? When you have all eyes on a big event like we did with Big Ben, and you do have the whole world worried about the pace of purchase or whether or not they were going to taper, they did allude to that it could happen soon. And basically, I guess the market's saying, you know what, we're going to correct a little bit so they don't. It's almost like what came first, the chicken or the egg. But the bottom line is on a day like we had yesterday, we call it a day to take notice. And on those days to take notice, what you want to do is you want to sell some loose longs. You want to clean up some positions you might not want to be in, take some risk off. And then there were some guys that probably went net short because that was a blaring technical signal that it could lead to some type of direction change.
Well, why don't you show us a visual then of the S&P and show us how we can use those strategies?
Okay, well, if you look here at the S&P, you'll see trends here. Okay, we've had a lot of different trends going on. This is the macro trend that's been in place ever since that November low, and it got tested once right here on the 50-day. When it pulled back from the 1597, and then from there we've had this accelerated trend, a trend that's been fast, furious. Frustrating some bulls that sold too early. Squeezing the bears. Who knows if they were even able to stay solvent until we saw yesterday. And then yesterday, you take a close look here. This was your outside day when it pushed through. What was this? The high was 1674. Went as high as 1687, then closed below it, giving you a sell signal. So thank goodness this happened because a lot of traders probably got out of some positions they've been carrying. And then today, we're getting some downside follow through. So for right now, I would be looking at the 21-day moving average in this sector as well as a lot others.
So do you think that this could be the start of something bigger in this pullback?
Well, you're going to see so many people come out on TV now. The bears are going to probably be paraded on stage. Oh, we're going to have a 20% correction now. We're going to have a 10%. We're going to have a 5%. You know what? No one knows typically where we go. What you do is you measure levels along the way. But if you're in the right frame of mind and if you're in the right composure of the market where you took some risk off yesterday, you don't have to know where it's going to go. So if you want to take a quick look at what's happened in 2013, let's do so. Okay, we were just talking a little bit, off camera, so to speak, where these were the two other pullbacks we've seen in 2013. The year started right here where it ignited. So this first move from just say 1530 down to here, I believe we said that was something like 3%. So this was your 3% correction. Here from 1597 down to the 50-day, that was, I think, closer to 4%. Okay, so with that being said, a trade or a pullback from the high of 1687 to right here, that's about 3.5%. So that would be comparable to what we saw here. And then if we were to pull back to the 50-day again, and it'll take some time, so maybe the 50-day moves up, coordinates with this prior pivot, a 5% correction would bring you closer to 1600. So here's your 3, here's your 5. So this would be a 3 to 5% correction off the highs, which is something I do think both the bulls and the bears want because there's been performance anxiety everywhere. Things are extended. We want a dip to buy, and this could be it. So we'll map out levels in all the sectors.
Right, but of course, there's no guarantee that we'll get that. The market's shaken off things like this before.
Right, and we've already come halfway off the lows. I think we were down 22 handles, and we walked in here, we were down 14. So, so let's see how the next few days pan out. You also judge the size of the bounce, after a potent down day to figure out where we can go.
Exactly. Well, let's check the temperature of the different sectors. The banks, in particular, showed real signs of exhaustion yesterday.
Yes, and we talked about different calculated buys 2 weeks ago in so many of the banks, and I found myself only back in Bank of America, which is something I'm trying to hold on to for a core. But anyway, you look at the banks, and look how extended they've become. The XLF, just like every other group, has had an enormous run, and then this last big trend, got very accelerated, and here you are, you pushed through this prior high here, came back below, just like most of the markets out there. It closed on the 8-day. So if you were looking to buy the banks, which I do think is a good idea, I think look at the 21-day moving average. That's around 1936. So if you sold into the strength or trim some and you're looking to buy some quality names, look at the names when the XLF gets down to the 21-day. And then, who knows, if we do get a little bit deeper, there's your 50. So write down the 21-day and the 50-day. That'll be your mapped out plan, and we'll figure out what to do when we get there, or if we get there. All
right, let's talk about a plan for the industrials. The XLI gave back the gains of 3 previous sessions. Does it look like it couldn't go even lower?
Yeah, well, it's gonna sound redundant, but we're gonna do this on every sector because depending where you want to be, plus what you want to do is also when the market pulls back, just say if the S&P gets to only the 21-day, you want to see what held higher or what didn't, so you know where the relative strength is. So just say if the S&P pulled all the way down to the 50-day, okay, which it could, and then something like the industrials only goes to the 21-day, then you know that money went there, and the flows. So that would be a spot to look for when the selling subsides. So anyway, you look here at this group, just like everything else, had a really nice breakout, an accelerated trend like this, or an ascending channel, closed a bit below it. Your 21-day is all the way down here at 42.95. So this would be a spot that I think you try and buy back, or at least cover some shorts. And also if you went home short, overnight, you cover some. So just I want to give one more rule. Like a lot of people see sometimes what I take home, and I had a net short in the spiders, so to speak. So like Red Dog, what do you do, with all your different time frames? What I always do is like we're down 13, 14 handles. I'll cover some, even if I do think in the next few days we go lower, and cover some, and then watch the intraday action, and then put some on and trade around it. So if you went home short the industrials yesterday, you cover some, and if your plan is that it hits a 21-day, stay with some where you're comfortable until it actually gets there, and then figure out if that's the viable spot, and that was a spot on the industrials.
All right, that's a good rule to have. Let's talk about the Russell, which saw a pretty potent sell-off. Could weakness be further in store here? We did see it bounce back a little bit into the close, so has the damage been contained?
Well, the Russell is interesting to watch because that's considered the growth. Okay, so you want to see if the Russell holds up better than some of these other sectors. That can give us some hints where to go when, again, the market gets its footing. So if you look here at the Russell, just like everything else, was very extended, okay, and you had a blaring, engulfing day. Here's your outside turn. That was your pivot, traded through, came back below, and it's already near the 21-day. So this is actually showing a little relative weakness. So it's probably opening around there. If you went short the Russell, maybe you cover a little bit here. Here's your huge level in the Russell going across. So this would be considered support 1, support 2. Write down the levels if you're looking to buy names or buy the Russell. So that's also something. Everyone doesn't have boatloads of money where you could buy everything. So if you only have a limited amount to invest or trade for your trading account, you have to pick and choose which sectors to go to. So that's why you want to map out all of them.
Exactly. Well, let's also touch on retail, which didn't see a big engulfing bar like some of the other sectors, but it did touch its 8-day, did not break below it though. So good sign there.
Well, this has been showing relative strength, so sometimes the strongest groups, they're the hardest to bend or break. So if you look here at the RTHs, where there's been a lot of relative strength, here is a pretty big trend coming all the way down that started the year that comes in right here. And then your more accelerated trend line was right there, which we did, come into. We came into the 8-day. So again, just like everything else, I know it doesn't sound sexy or it's not that interesting, but here's your 21-day moving average, which is something that's held the retail group pretty much the entire way this year. So instead of chasing excitement and you want to buy a dip, here's that dip at the 21-day, and then the 50-day comes in more with this macro trend line. So we'll see what type of correction we get there in retail.
All right, coming up, we're going to go in the trenches with high beta tech, but first a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF. I'm Mark Sperling.
We're back and going in the trenches with high beta tech. Let's talk Apple, which as of late tends to trade counter to the market, and yesterday was no exception. Was the only one of its high beta tech group to post some gains. Got a push into the close and registered 0.4% of gains. So do you think maybe we could get continuation here in Apple?
Well, when you have a sea of red out there, you want to see where some relative strength is. And during the entire move up, Apple did not show relative strength. Recently, it's been trying to get its footing and get a new pattern in. You know, you look at the chart of Apple here, you will see that, you know, we've been talking about this somewhat of inverse head and shoulders pattern. Here's your left shoulder, your head, maybe the right shoulder. It did try and break out yesterday, but then the market just wasn't ready for anything to break out. But anyway, here's this huge downtrend. Okay, that, you know, it's trying to just change. So I would say short term, you know, if you're long Apple, you know, from an intermediate basis, you could trade it versus 430. If it were to go from negative to positive today and show relative strength, I think that would breed some conviction back into this stock. Then ultimately, this 460 is a big level. But if it were to just fall apart and continue the selling and not show any kind of relative strength, you know, this has been a weak performer. So we need to see what kind of composure we have here with Apple.
All right, and let's talk some leaders like Google, which showed signs of fatigue also yesterday, closed down about 2%. If we get a couple days of weakness in a leading stock like this, maybe a buyable opportunity. Yeah,
and this is something I think even traders will look at today. You know, yesterday it kind of led the market lower, gave some signs that, you know, things were getting a little tired up here. You know, it broke an upper area. We talk about high-level stops sometimes, you know, in these key stocks, and here was your high-level stop. If you bought it on when it broke above this descending channel right here, you know, and you thought maybe it could flag and continue, if that was your thesis, that thesis changed yesterday when it broke below. Here is your 21-day moving average. So right around 870, let's see if this name could hold the 21-day moving average. So at that point, I think it's down, you know, close to it this morning. So see if you see some type of divergence, and if you sold, you know, into 920s or not, sorry, like above 900, you know, here's your spot maybe where you could buy the dip, or if you didn't chase this, you know, this would be an area, and then the 50 days all the way down here. So let's see if these, you know, these high quality go-to names or best in breed could hold their 21-day.
Amazon headed lower as well. What level does Amazon need to hold to stay out of trouble?
This one still is frustrating so many. You know, every time it looks its best, it's a sell, and every time it looks its worst, it reverses to the upside. If you look at this channel, we've been talking about this, you know, for a while now. Whereas, you know, here at the bottom of it, it tried to break below the 200-day and didn't go lower, pushed back up to resistance, and then, you know, was down, showing relative weakness yesterday. It's probably opening a little bit lower. So, you know, see if any of these names try and go positive. You know, if I would wait to, you know, till it gets closer to the bottom of this channel, but who knows? If it's below yesterday's low, then if, you know, this same trend continues, you know, it should be somewhere buyable, you know, around this 251 to 255. We shall see.
LinkedIn retraced 4% yesterday and broke below some key moving averages, including its 50-day. So where's next level of support there?
This one, you have to be a bit more careful because it's had such a major move. You know, we started talking about this when it was in the 90s and had two great quarters, 3 great quarters, and then finally last quarter wasn't as good or didn't have enough to keep it going, so you had that huge gap down. And if you look at the chart here now, it's been trying to consolidate. It closed in a dead highs, remember that, and then the earnings weren't enough, and boom. That's why we do not take stock into earnings, because sometimes that could happen. Then it held support. You know, tried to rally, filled some of that gap, and then yesterday was flagging, and then it broke below this little pennant right here. So at this point, you know, we're going to need to see how it holds. But this is one of the first few leading stocks that are now below their 50-day moving average. So, you know, that tells me a little bit more cautious. But again, if you're a macro investor and you've been holding this thing all the way down since here or since it broke out there, you don't have much to worry about. But overall, you know, intermediate-wise, you know, this is, you know, your big support, and that support comes in, you know, closer to the 170-ish area. So that's where I might take a look to see if I can nibble.
All right, and we talked about some signs of exhaustion in Netflix previously, but the stock saw a big down move yesterday and retraced 3.6%, broke below its 8-day, so 21 days. Is that what we're keeping an eye on?
There you go. What a coinky dink. You know, and if you look here, it's similar to Google, where it was trying to flag after, you know, a few monster moves, and lost momentum. That it could happen. You know, lost the 8-day. Here's your 21-day at 221. This is something some guys will probably look into today. For some reason, sometimes Netflix loves to go positive when the market's weak. We shall see. So this is something that will be on my game plan to see if it could diverge. So here's 221. And you know, remember these little entries. That's why we say entries and exits matter. You know, here was your entry when it went above this. You know, what was this level here? If I remember, like 210. Sorry, and then here was 220. And then you had an engulfing bar that said, okay, it's not ready to go anymore, and then boom. So let's see if 221 holds.
Time for some quick hits. We talked about the banks looking tired. Goldman Sachs looking particularly exhausted yesterday. We saw some profit taking there. What are the levels to watch in Goldman?
Goldman gave a blaring red dog reversal, and it was one of the last few to give up. It tried to stay strong all day. I would say you look at Goldman Sachs, and here is your big topping tail. If you took it home short, you know, this is above the 8-day still and above the 21-day, so it's showing strength. You know, here's this. Oops, sorry. Here's your little ascending channel, and it does look like it's breaking. So I would say, you know, I wouldn't be looking to buy this one so quick. You know, I think maybe a little bit closer to 153 to 155. Look where it came from. So I would say this was your sell signal, especially if you bought it here or here. And now this would be a spot to be, you know, if you went short, to look to cover and maybe look to buy back.
Tesla met some buyers at its 8-day early yesterday, but then was weighed down by the sell-off in the broader market. But it's still holding above its 8-day, so what does that tell you about its strength?
It's just trying to hold in there. And it'll be interesting to see, because now everyone's saying, oh, all these highly shorted stocks that were such great vehicles, they should get hit first because some of the steam is being let out of the market. We'll see. So you look here at the chart. This is one level to watch. This was what held you know, almost 2 weeks ago. Yesterday, it tried to break above this small descending little channel here, but failed. But you know, it didn't get hit too hard. So now it's opening lower. You know, see if it can go positive. If it can go positive, you know, that's a sign that these things are not done. You know, and if it comes in a little bit more, see if it holds this bigger support. And the 21 days all the way down here. So this has been a monster move. So just I would keep your size down and let's see what type of, you know, composure it has if we get into some kind of corrective activity.
Well, speaking of monster moves, after its huge move, Solar City gave back almost half of its recent gains within 2 days. So should we be prepared still for lower prices?
This is just trying to figure out this new range. You know, it also went a bit parabolic, and guys have been trying to short it a little bit lately. And the whole solar sector has been, you know, in fuego, so to speak. But you know, here is your little, you know, this wasn't even an outside day. It was kind of like a bull trap. Then yesterday, it tried to be strong, tried to hold the 8-day, but came in. So this is something to look at. You know, it's down probably this morning. Buy it maybe verse yesterday's low of 41.10, but if it doesn't hold there, again, look how far down the 21 days. That just shows you how quickly this huge move happened. So I would be just a bit more careful with these names that are considered more story stocks versus great fundamental stories. With
how it's behaving right now. And checking in on metals, gold reversed its sharp gains yesterday and put in a big red bar. It's down to support level of 130, which will be interesting to see if it can hold.
Yeah, well, that's where it closed yesterday, and today it's gapped up as, I guess, a safety trade, so to speak. So you look here and you'll see that, you know, we talk about adjustments. Here is one adjustment around 161. Here is your more macro spot around 148.5, and then here's a, you know, what looked like a double bottom, which it could still be around that 130 and change. Yesterday it was a very volatile trade where it went through this, you know, this pivot, so it definitely squeezed some shorts right there, and then came back below, but then it held this, you know, prior support. Also, if you look back here, that's what created the double bottom. So today it's opening up a little bit. You know, here's your line in the sand. If you want to be long gold, you give it to this, and that's it. If it wants to start acting better, it's going to have to hold this gap up and really ignite for anyone to start trusting it, because this trend to the downside has, you know, has been pretty strong.
Well, so bull or bear, we could use this correction as opportunity. Find our spots today. What are your thoughts as you head into this trading session?
I'm going to just try and be flexible. You know, we have a big range from the high of 1687 to where we were this morning. Pre-market, I think closer to 1640. So that's about 47 handles of a big range in a day and a half. So it might take a little time to absorb that. But I also don't want to be buying things too quick. So I'm going to do pretty much what we talked about here. I'm going to map out the 21-day moving average. I'll probably cover, you know, some of my spiders, you know, pre-market, and then figure out if they can't bounce. I might be short a heck of a lot more, you know, spiders than I am coming in. It all depends on the composure. I'm going to look at, you know, some leadership stocks, see if anything can go green. Days are red. You look to see if anything can pull us off our lows. I also nibbled a little. I have a little Bank of America I'm just going to sit with, and I'm not going to add. I'll figure that out, you know, because I do think that has higher prices, but that's more of a macro spot. You know, Apple had a little relative strength, so if you're on my virtual trading floor, you saw that I went home with a little bit yesterday. You know, so we'll see if that can go positive. If that can't go positive and, you know, starts to be back like the old Apple ways, I'll get out of it and I'll just salvage it. So for people who didn't, you know, sell as many things as they would have wanted yesterday, you know, you still could sort of salvage the trade today. You know, if the market tries to come back and, you know, your stock really doesn't rally, you could take your loss here if you missed yesterday, because not everyone was so fast to, you know, take some money off the table. So you do that to make yourself feel comfortable. Because who knows, if we do get a 3 to 5% correction, which we've basically only had almost twice this year, you know, there will be some lower prices, and you could always, you know, try and get back then. So with that said, whatever you do what makes you feel comfortable, not where you lose sleep at night. And at this particular point, you know, the outside day, which was a nice day to take notice, has had some downside follow through, and don't start thinking 20% down, 25% down. Just let's have a plan, and today, with today's levels, you know where the 21 and the 50-day moving averages are.
Right. If the market's shown us anything, it's shown us not to get ahead of ourselves,
yes,
right?
at all.
All right. Happy trading, everybody. Have a great day.